Narrator, October 29th, 1929, a day that would become known as Black Tuesday. The Wall Street crash of 1929 marked the beginning of the Great Depression, the worst economic crisis in modern history. Billions of dollars vanished in just days. Families lost their savings and the world's financial systems spiraled into chaos. But how did it all happen? What led to this catastrophic collapse? And what were the consequences for the global economy? In this video, we'll explore the events leading up to the crash, the causes, and its devastating aftermath. Narrator, to understand the Wall Street crash, we need to go back to the Roaring Twenties. The 1920s were a time of tremendous economic growth and optimism in the United States. After World War I, industries boomed, technology advanced, and the stock market became a symbol of prosperity. People from all walks of life started investing in stocks, believing it was a guaranteed way to get rich. The rise of buying on margin, where investors borrowed money to buy stocks, fueled the market's growth. In simple terms, people could invest a small amount of their own money and borrow the rest. If stock prices kept rising, they would make massive profits. But what if prices fell? That's where the real danger lay. Narrator, by the late 1920s, the stock market had turned into a bubble. Prices were no longer tied to the real value of companies but driven by speculation and greed. Investors poured their money into the market, hoping to sell at a profit. In September 1929, warning signs appeared. The economy was slowing and corporate profits were declining. Yet stock prices continued to rise. On October 24th, known as Black Thursday, the bubble finally began to burst. Panic gripped Wall Street as millions of shares were sold off in a frenzy. The real disaster struck on Black Tuesday, October 29th, 1929. Over 16 million shares were traded in a single day, an unprecedented number. Prices collapsed and billions of dollars disappeared overnight. Narrator, so what caused the crash? While the stock market collapse was sudden, the roots of the crisis ran deeper. Speculation. Investors believed stock prices would rise forever, creating an unsustainable bubble. Buying on margin. Borrowing money to invest made the system incredibly fragile. If prices fell, investors couldn't repay their loans. Economic imbalances. Wealth inequality meant the rich benefited while the majority struggled with low incomes. Consumption couldn't keep up with production. Overproduction. Factories and farms produced more goods than people could buy, leading to unsold inventories. Weak banking system. Banks lacked regulation and lent recklessly, making them vulnerable to collapse. Scene visual of a domino chain falling. Narrator, these factors combined to create the perfect storm. Once confidence in the market was lost, panic set in, and the system collapsed. Narrator, the Wall Street crash didn't just affect investors. It triggered a chain reaction that spread across the world. Unemployment soared. By 1933, 25% of Americans were jobless. Banks collapsed. Thousands of banks failed as people withdrew their savings in fear. Businesses shut down. Consumer spending plummeted and factories closed. Global ripple effects. The United States economic collapse impacted Europe and the rest of the world, deepening the economic downturn. This economic disaster would come to be known as the Great Depression, a decade-long period of hardship and suffering. Narrator, the Wall Street crash of 1929 is a stark reminder of the dangers of speculation, unchecked greed, and a lack of financial regulation. It showed the importance of economic stability and the risks of ignoring warning signs. In the years that followed, major reforms like the Glass-Steagall Act and the creation of the Securities and Exchange Commission, SEC, aimed to prevent future financial collapses. Today, we continue to learn from the mistakes of the past. The crash serves as a cautionary tale for investors, policymakers, and economists alike. Bubbles burst and unchecked markets can lead to disaster. Thank you for watching. If you found this video insightful, don't forget to like, comment, and subscribe for more content on history and finance. What do you think were the most important lessons from the Wall Street crash? Share your thoughts below.